Hi, good afternoon. Thank you so much for being here, getting back from the lunch break in good time to hear this very interesting discussion that we're going to be having about cross-border payments. As you know, it's an industry that is ripe for disruption and in the middle of disruption, and I'm excited to be here asking questions to Ripple and Mastercard about the future of cross-border payments. Let's start with a vision out to the future. Henrique, how do you see the cross-border payments experience 5 years from now?
Thanks, Katie. Thanks for the invitation, Ray and Fintech Americas. It's a pleasure to be here this year again. So what we have done and what we see for the future at Ripple is really how to remove the friction on the cross-border payment space, having more efficient process with less costs, improve the speed, and also work with the banks and the payment providers on the business process to make it a seamless process and payments that could happen instant, being local or being cross-border payments. So when we look into the future in 5 years, I think we are not going to be discussing anymore payments that are not instant, right? So we see many countries implementing domestic rails 24/7. And we see a lot of banks and payment providers working, bridging those local domestic clearings, bridging that with the cross-border payments, also 24/7. So I believe in a few years from now, any payment we are going to make, if it's domestic or international, will be 24/7 and can be executed seamlessly as if I was sending an email or if I was sending a file through the internet.
Would you agree, David? Do you think that instant payments in the cross-border realm are...
Yeah, and I think that it's very consistent, our view from Mastercard in terms of what does the global payment world looks like a couple of years from now, right? And typically you go to a store, right? You can buy anything with your card. You know exactly how much you're paying, how much the merchant is receiving. And you also know that you're getting the money now, or whatever it is, after settlement in 2 days. But it's crazy to see how in the cross-border space, and you want to send a wire to like your family member in a different country, you have no idea how much they're going to get. You don't know when they're going to get the money. And to Henrique's point, it's ridiculous. So I strongly believe that as an industry, it's not only where I see it, I think it's a must that we have to get there. Because otherwise, I think the development and everything that we're doing in innovation in this space, it's pointless.
It's not just about the time though, right? It's also about the cost and the transparency. Do you think that that's going to, I mean, how can we overcome those frictions? What needs to happen?
So I think the interesting model, and I don't know how many of you are actually familiar with the way cross-border payments work, but typically how it does, I'll explain it simply, is you have correspondent bank relationships, and many of you are bankers, you're very, very familiar with it, where you're sending money from, let's say, Colombia to India, and there is 8 or 9 stops that need to happen in order for you to get money. And it's basically bilateral agreements between those banks. So obviously, costs is a big deal because everyone wants to take a chunk of that, right? And also transparency, right? So you have to keep track of everything that's happening and what's the specific timelines that they're open. So I think that if you are able to remove those intermediary steps, you achieve cost and transparency.
Mm.
Right, I agree. I have a personal experience. So 2 weeks ago, I went to my bank in Belgium. I wanted to shut down my account and transfer euro to my US dollar accounts here in US. And I asked those questions to the branch manager, saying, when my money will arrive there, what are the FX rate, what are the costs involved with these transactions? And she couldn't answer any of that. And my money has not arrived yet after 2 weeks. So last Friday, I got a call from them saying, oh, we found there was a mistypo on your account number. So we are sending the money back to the sending bank through the intermediary bank, and then you are going to receive another order will be made. You're going to receive the money on your account. But I've checked this morning, and the money is still not there. So I will be on a panel tomorrow as well, a blockchain panel. Maybe I can update you guys if the money has arrived already. But this is the reality. So what we are building at Ripple is really the Internet of value. So how we can move money today the same way we move information, right? It's crazy. We can stream video from the space, and we cannot send money, right, internally. Even if it's my own account in Europe, my own account in US, and the money cannot be transferred immediately. So that friction, I think it's going to go away in the next few years, and we are not going to be discussing this anymore.
What I think is interesting is that we have the technology already, right? There are solutions like Ripple, there are solutions like ones that Mastercard have. There are solutions out there. What is the, and you know, for our audience here who are here from banks, what do they need to do to make this happen? How can, what are the hurdles to implementation of better technology for cross-border payments?
So we at Mastercard, what we're trying to do, just to answer that question, is we're leveraging our card-based settlement process. So you know, banks at the end of the day, when you do a transaction with your card, there is a settlement process that Mastercard handles. So that means that every bank has an account, an institution that Mastercard has agreed, and that's how money flows between one bank and another bank. So our solution, what it does, is it leverages those settlement rails, and we provide a layer of information. So basically, you take out the middle guys, and you maintain the banks, which are our core assets, but not 8, just 2, right? So what banks in general need to do to get on board with this, first is spark curiosity, right? So it's about asking the questions to the right teams in the markets to see how they can come on board. It's typically the transaction banking side of the bank that does that. And we're more than happy to walk through what are the different steps to get them.
But I think that often some of the legacy systems within the banks make it maybe difficult to connect with new systems. Would you say that's
correct?
Fair?
Yes. So usually the banks, they have very modern front ends, modern apps. The customer experience is improving, but the legacy systems, 20 years old or even more. So the challenge is the middleware, how we can make it more efficient, right? So what we have seen the banks doing is really trying to disrupt themselves, trying to create things that they could leverage with the new technology. So to your point, the technology is there, yes. The legacy systems are still there as well. So how can we manage this situation looking forward, right? And we need to enhance those systems. At the same time, we need to implement, and we need to keep our market share. We need to fight with the competition. So a lot of things are happening at the same time, and how we can be clever about it and gain market share instead of just retaining the customers or even losing market share. So this is the key topic that we see when we discuss with the banks. That we have around 200 banks and financial institutions are using our solution, and they are all going through the same process of how can we manage this situation moving forward, looking into the future.
Yeah, and just to add that, so one of the things we had to do to kind of address that issue of legacy platforms was that our solution is built to also take the legacy systems language. So we had to create after we build this everything with like API based and seamless, we realized many of our issuers and acquirers and banks don't have necessarily the capabilities to connect seamlessly. So we had to go and build a layer of infrastructure that kind of speaks that language.
That's interesting. So you've got a special infrastructure that
yeah,
kind of connects the old and the new, as it were.
Mm-hmm. Exactly.
Henrique, do you see, I mean, blockchain is, I think last year it maybe reached the peak of the hype cycle. This year we're seeing some more concrete implementations, particularly in Latin America, of blockchain. But do you still see a reticence from some banks to get on the blockchain train?
I think so, yes. I don't want to steal the thunder of tomorrow's session, but of course what we see is that We were discussing with another player not so far ago, and he said, oh, we have 146 POCs on blockchain. So when we look at that, we know that 95% or maybe 98% will not succeed, right? And also you need to focus, right? So what Ripple decided back then was, let's choose one use case that we believe is a big issue, is a big pain in the market, which is cross-border payments. We are talking about a multi-trillion-dollar problem that we are resolving, and let's focus on that. So even the banks, they come to us today, say, oh, can you help us with trade finance as well? Can you help us with securities? Can you help us with many issues we have today that we could resolve with blockchain? And we have decided back then that we will nail cross-border payments first. We will take the example of Amazon, right? So Amazon, when they started, it was Amazon Books, right? They were selling books. So if they were not successful selling books, they could not go on and implement other use cases and become the giant they are today. So if we go back and we think, what are we focusing now? It's really cross-border payments as the first use case for blockchain. And then once we succeed and the banks implement and they are comfortable with that, of course, we are going to explore other use cases and expand the technology to address those pain points as well.
Let's talk a little about the economics of cross-border payments, because let's be honest, it can be a big money spinner for banks. Why change that?
Yeah, so in our case, we have several examples of payment providers, financial institutions, and banks that after implementing the solution, they could really understand where the costs were. So it's interesting because in some cases, when we talk with the banks, they don't even know the economics of the cross-border payments. The market is kind of complex with the intermediary banks. Who does the FX? It's going to be who's going to pay for the fees? It's going to be our share, Benny. You have a lot of complexity on the process, also rebates and etc. So when they implement the solution, the technology, they can really see the costs of the transaction and they can reduce dramatically. So we have one example in Brazil. It's a fintech called BTech. They were here last year on the stage with us, and they could reduce their costs by 90%. So they were charging $20 to make a cross-border payments from Brazil to Europe, and they could reduce, and now today they are charging $2 only, from $20 to $2. Just because it's a new technology, they can really become more efficient. It's a real-time cross-border payment, so that helped them they can make money and profits out of the FX as well. So all of that helped them to bring a better customer experience and also to reduce the cost to the final customers.
Yeah, I think this is a big topic because so in my area I cover both domestic payments, cross-border payments, instant in general. And it's incredible to see the difference between the efficiencies around cost structure in the domestic payment scheme versus the cross-border payment scheme. Domestically, and I'm sure many of you that live in different parts of Latin America, it's like in the cents. Sometimes it's a dollar or like a couple of real if you're in Brazil. But you go to cross-border, and all of a sudden you have like average, like when you do like all the things, like 10% for banks. And if you go to like these new digital players, it could go up like down to 4%. It's ridiculously high. And you think, oh, but it's a cross-border reason. But then you guys go outside to different parts with your credit card, right? And you're going to buy something in, I don't know, in Europe. Many of our cards don't even have transaction fees, and you're just paying basically the FX, which is very transparent to you. It really doesn't make sense, right? You can buy something with a credit card at a merchant in Europe and be very transparent with the cost, not that high. But when you're sending a wire, all of a sudden it gets like super expensive. And when you drill down into what's happening, it's kind of like, it's because of these 8 layers. And what's even crazier is who's getting the money. So typically, let's say you're sending money in Colombia, to my example, in India. The customer is owned by the Colombian bank, and it's sending money to the corporate, call it in India, who owns that relationship. But the one who's making the most money is the bank doing the FX, which is typically none of those two. It's typically one of them in the middle that's getting like the big FX spread. And they're not even owning the relationship. So I think there is a lot of work to be done on restructuring the economics of this space.
That's an interesting one, because I think that the FX side of things, like you say, often we don't see it. But it's also complex, right? Because you can't just, we all know, right? You can't just directly convert from Peruvian soles to Colombian pesos, that you have to go through the US dollar. Even with Ripple, you have to convert, well, you don't have to, but you have there is some intermediary, right? There is maybe a cryptocurrency that you triangulate through.
Right.
What do we do about that?
Exactly. So what happens today is that when you're talking about a major currency, US dollars, euros, Swiss franc, pounds, they have direct FX rate with all other currencies usually. But when you talk about two exotic currencies, right, from peso to Indian rupee, or from Brazilian real to Singapore dollars, there is no other way to do it if you don't go through US dollars or euros or those major currencies, right? So what we have created was a way that you could use a digital asset to bridge, to function as a bridge currency between those two local currencies. So for example, if you're sending money from Colombia to India, instead of going from peso to, I think it's peso in Colombia,
yes.
Right? Yeah. So if you go from peso to US dollars or to euros and then convert again to Indian rupee and using those intermediary banks, you could convert locally in Colombia peso to XRP, for example, or Ethereum, any digital asset, and then you send the digital asset overseas, and then in India you convert XRP into Indian rupee, right? So that transaction happens in 3 to 5 seconds. You still have two banks on both sides. They are doing AML, know your customer. They are complying with the local regulations. You are just speeding up the process. You know the FX rate that's being applied on both ends. You can empower your customer, your final customer, to decide if he want to take that transaction or not. He knows how much he's going to pay, the cost, he knows the FX rate, and he knows when the money will arrive on the end beneficiary. So empowering the customer, enhancing the customer experience, I think it's key moving forward, and not having this black box saying, I don't know how much I'm going to pay, I don't know how much money will arrive, and I don't know when the money will get there.
Yeah, and I think for Mastercard, there's two, I would say, two strategies on FX. The first one, to your point, on non-exotic pairings of currencies. We currently do it for our card business. So we have like trading of big currencies. Mm-hmm. So that's resolved. And we pass those benefits to the originating institution. The second one is what we're doing because of our lean strategy to remove the intermediaries. And our strategy is not to profit from the effects per se, but it's to pass that FX benefit to the originating institution, the one who's sending the money. So what we do is we negotiate strong, good FX rates to our partners in all those endpoint locations. Mm-hmm. So they give us a good rate on the FX, and then instead of eating that up, and we just pass those benefits to the originating institution, which is the bank. Mm-hmm. Now, the reality, to be fully transparent, the bank can still charge insane amounts of money to the corporate, but we encourage the banks to pass some of those benefits to the end corporate.
We are almost out of time. I want to ask one final question to wrap up, which is again about the future of cross-border payments. How is the ecosystem going to look in 5 years from now? Because there are a lot of different players. SWIFT, unfortunately, wasn't able to make it today, but they kind of remain the elephant in the room. How do you see the ecosystem of cross-border payments working in 5 years' time?
I believe it's not going to have just one player. I think the opportunity is there, right? So we see a lot of companies investing on that opportunity. It's a multi-trillion-dollar problem. They are, of course, creating solutions with APIs and ways to connect networks. I think the most important piece here is how to connect these different networks. Because if we look to a big bank today, like Citibank, HSBC, they already have their network. They already are in 100 countries. So they can do transfer between their branches, their different subsidiaries. But when you want to connect those different banks or those different players, connect those networks into one global system that you can send money today. If I'm sending an email, I don't need to know who you work on the other end of the world, who is your telco. I don't need to know anything. I'm just sending, and there is a protocol, and there is a standard that will read that information, and then you're going to get on the other end. I think this is the key moving forward. And going back to your example, like We had in the past, in last century, we didn't have containers, right? So when we had to ship things, we had to send in bags, and things were broken, etc. When the container was created, was a standard, right, for shipment, etc. So once that's done, what we are doing, we're trying to create that container for the cross-border payments. At that time, the trade flows increased more than 700%. And today, it's a big issue. If I'm sending $100 million from one big corporate to another, you have ways to do it, and you can pay $100 for $100 million. But if you're sending $50, $100, small amounts, or even try to send 50 cents, it's going to be impossible today. So I think what we need to evolve is really on the use cases where you have high volume and low value use cases. That's key for Ripple and what we are trying to help the banks to deliver.
And I think for us, transformation is happening in the domestic payment scheme. It's very clear how all countries in Latin America are starting to see complete transformation on their payments ecosystem from 24/7 to real-time payments, application usage. That same transformation is going to happen on the cross-border space. And I think in 5 years from now, it's going to be at the initial state of that disruption.
Wonderful. Henrique, David, thank you so much for joining me for this panel. Thank you very much.
Thank you, Kate.
Thank you.